Welcome to Flux Reach and thank you for joining us in this video. Today we are covering United Kingdom VAT and tax basics for online sellers. This guide is created for beginners who want simple and practical explanations. We will move step by step through each important topic. The goal is to help you understand your responsibilities clearly. By the end, you will feel more confident about managing VAT. VAT means value-added tax, and it applies to many products and services sold in the United Kingdom. Online sellers often encounter VAT as their business grows. VAT is collected from customers and then passed to the tax authority. Different VAT rates apply depending on the type of product. Knowing these basics helps you avoid confusion. Clear understanding leads to better financial planning. Not all online sellers must register for VAT immediately. Registration becomes mandatory when your taxable turnover reaches the official threshold. Taxable turnover includes VAT-applicable sales only. It does not include VAT-exempt income. Monitoring your turnover regularly is very important. This helps you stay compliant at the right time. Some online sellers choose to register for VAT voluntarily. This option is available even before reaching the threshold. Voluntary registration can improve business credibility. It may also allow you to reclaim VAT on expenses. However, it also adds reporting responsibilities. You should consider both advantages and obligations carefully. Understanding when to register for VAT is a critical decision. Late registration can cause penalties and extra payments. Early registration without planning can affect pricing. Knowing your business direction helps you decide correctly. Forecasting your income plays an important role. Good planning reduces future stress. Once registered for VAT, you must charge VAT on eligible sales. This VAT must be shown clearly on invoices. Customers should see the VAT amount separately. Accurate invoices help with record keeping. They also support proper VAT return submissions. Good invoicing habits save time later. VAT returns are reports submitted to the tax authority. These reports show how much VAT you charged and paid. Most businesses submit VAT returns quarterly. Some may submit them monthly or annually. Filing on time is very important. Late submissions can lead to penalties. Keeping proper records is required for VAT compliance. Records include sales invoices and purchase receipts. Digital records are now commonly used. These records must be accurate and complete. They should be kept for several years. Organized records make reporting easier. Online sellers often sell across different regions. Selling to customers outside the United Kingdom can affect VAT rules. Some international sales may be zero-rated. Others may follow destination country rules. Understanding where your customer is located matters. Cross-border sales require extra attention. E-commerce platforms can simplify VAT collection. However, responsibility still lies with the seller. You must understand how platforms handle VAT. Some platforms collect VAT on your behalf. Others require you to manage it yourself. Always review platform policies carefully. The flat rate scheme is one VAT option for small businesses. Under this scheme, you pay a fixed percentage of turnover. You still charge customers the standard VAT rate. This scheme simplifies VAT calculations. It reduces paperwork for some sellers. However, it may not. The standard rate VAT method works differently. You charge VAT and reclaim VAT on expenses. This method requires detailed records. It offers more flexibility for expense recovery. Many growing businesses use this method. Choosing depends on your cost structure. Comparing flat rate and standard rate schemes is important. Flat rate offers simplicity but limits expense recovery. Standard rate offers accuracy but requires more work. Your business expenses affect which option is better. Profit margins also play a role. Take time before choosing. Changing VAT schemes is possible in some cases. You must meet eligibility requirements. Proper notification is required before switching. Timing is important when making changes. Incorrect switching can cause issues. Always plan changes carefully. Online sellers must also understand income tax obligations. VAT is separate from income tax. Income tax applies to business profits. Keeping VAT separate helps avoid confusion. Proper bookkeeping supports accurate tax reporting. Understanding both taxes is essential. If you operate as a limited company, tax rules differ. Companies pay corporation tax on profits. Directors may also pay personal tax. VAT rules still apply separately. Business structure affects tax responsibilities. Knowing your structure matters. Deadlines are critical for VAT and tax compliance. Missing deadlines can lead to penalties. Setting reminders helps prevent issues. Many sellers use accounting software. Software can automate reminders and calculations. This reduces human error. Accounting software can simplify VAT management. It tracks sales and expenses automatically. It generates VAT reports easily. Many tools integrate with online stores. Digital systems improve accuracy. They save time for business owners. The standard rate VAT method works differently. You charge VAT and reclaim VAT on expenses. This method requires detailed records. It offers more flexibility for expense recovery. Many growing businesses use this method. Choosing depends on your cost structure. Comparing flat rate and standard rate schemes is important. Flat rate offers simplicity but limits expense recovery. Standard rate offers accuracy but requires more work. Your business expenses affect which option is better. Profit margins also play a role. Take time before choosing. Changing VAT schemes is possible in some cases. You must meet eligibility requirements. Proper notification is required before switching. Timing is important when making changes. Incorrect switching can cause issues. Always plan changes carefully. Online sellers must also understand income tax obligations. VAT is separate from income tax. Professional advice can be helpful for complex situations. Accountants understand current regulations. They help with compliance and planning. This is useful as your business grows. Early guidance prevents costly mistakes. Support adds long-term value. Understanding VAT refunds is also important. You may reclaim VAT on eligible expenses. This depends on your VAT scheme. Proper documentation is required. Refunds reduce overall costs. Accurate records support claims. Staying informed about rule changes is essential. Tax rules can change over time. Official updates should be monitored regularly. Reliable information protects your business. Awareness prevents compliance problems. Knowledge supports growth. Running an online business requires responsibility and planning. VAT is only one part of financial management. Clear systems help reduce stress. Learning early creates strong foundations. Confidence comes from understanding. Preparation leads to stability. Thank you for watching this video on FluxReach. If you found this video helpful, please like the video. Subscribe to the channel for more clear and practical guides. Your support helps the channel grow. If you have any questions, leave a comment in the comments section. We appreciate you being part of the FluxReach community.